Hello traders, welcome to the LFB and our global video charting review. This is for Tuesday, the 8th of March 2011. My name's Marco Haig from the LFB Trade Desk. Hope I find you well. We do have to point out that Forex trading does involve substantial risk of loss. It is not suitable for everybody, and we do ask that due diligence is taken before you take and use any information from the video. We do post a disclaimer to the LFB website that we ask that you read and accept before continuing. Looking at the S&P 500 futures market, 1 hour chart, we can see that global traded markets are maintaining their recent pattern of trade that has created heavy consolidation on the near-term charts, with little in the way of momentum or sentiment that looks able to easily break support or resistance on the Japanese Nikkei, the German DAX, or the S&P 500. These markets are all looking very much the same. The 20-day simple moving average, which we can see here in blue, and the 50-day simple moving average, which we can see here in green. They're areas that are in play on the major global equity indices as earnings season winds down and trading algorithms retreat from their high alert status that's been looking for instant reactions to soundbite news releases. We should now get a period of either consolidation that loses that sporadic period of explosive trade that reverses. We should start to see that calm down a little now that earnings season is out of the way. There are no near-term new signals on S&P, German DAX, or Nikkei equity trade at this point in time. Taking a look at the bullion markets, they continue to hold support with gold and silver. We're looking at the gold bullion futures market at the moment, continuing to trade close to yearly highs. The heavier consolidation that we can see in the gold market, if we just compare this to silver, there's a silver review which is a little bit more bullish. Going back to gold, this heavy consolidation that we're seeing in the gold market has created a potential short near-term signal with a break below 1420, which would then target down towards 1417 and down then towards 1409, a potential $11 downward move, but it has to be noted that the short near-term signal in gold is against the mid-term and long-term trends and will only be for those contrarian traders looking to bank early and often, because as we've seen on gold, there is a propensity for the market to buy the dips to support. And take a look at the oil markets. We do use West Texas Intermediate. It is the most liquid of all global futures contracts in the oil markets. They're replicating the move seen in bullion trade with a sideways period of consolidation that has WTI holding support at 103 and as yet, though unable to break higher above recent tests of 107.50. It would seem that fair value has been found on global oil trade and no new signals are looking to be easily formed in the near term. Outside, as we commented on yesterday, the potential drop to support at 102.50 that could confirm that the buy the dip mantra is still in play. Wouldn't look to be getting short this oil market in any way, would be looking to buy the dip on that West Texas Intermediate oil play. Going to take a look at euro dollar because this is an inverse dollar index chart. If you haven't got access to a live dollar index chart, you can just use euro and flip it upside down. As noted in the previous client's notes, which called for some dollar index buying, the index found buyers after a test of support at 76.20, which coincided with a test of resistance on euro up towards the 40.40 area. The global video charting reviews recently have covered in depth the reasons why regional central banks will be looking to protect currency valuations against the regional major currencies, because central banks are going to need to be looking to protect those currency values also against the ravages of the weak US dollar policy that the administration in the US has put in place. The quadruple bottom that's formed over the course of the last 4 months on the dollar index indicates that both technically and fundamentally, the path of least resistance may be to hold higher and test 77.50 resistance, which would mean that euro pulls back towards this 37.50 price point over the course of this week. Most of the major currencies that trade against the dollar have seen very mixed periods of trade over the course of the last 4 months, with some moving higher, some moving lower, and some moving absolutely nowhere in relationship to percentage gains or losses against the greenback. Each major currency looks now to be setting price values on potential economic growth and expansion, which is a move away from the last 4 months where price values were set by currency movements hedging the manipulation in the US dollar liquidity market. So we're getting an inflection point, we're getting a swing change. Main currency markets are at that inflection point with potential for some US dollar buying in the near term to possibly dominate as each of the three regional global markets open and close each day. And taking a look at dollar Swiss, we'd pointed out numerous occasions over the course of the last 3 years, but especially over the last 3 months. If you get movement in dollar Swiss that breaks the previous session high or low, the chances are that that will transpose itself into correlated movement on the major pairs. If you get movement on the major pairs that's trying to break and you come back and look at dollar Swiss and it's going nowhere, the likelihood is that the other currency movement will not be sustainable. The three main times to look for breakout movement are at 2 a.m., 7 a.m., and 11 a.m. East Coast time, which are in line with Asian markets closing, European markets opening, London fixing prices on oil and gold bullion markets, and then the close of the European market, which leads to daily book balancing. The short dollar trend is still in place on the mid and long term reads. We're not looking to get bullish for any length of time on the US dollar. And that's going to lead traders to look to bank early and bank often when buying the greenback against the mid and long term trends. Attention must also be kept on economic calendar releases that are going to help stimulate any breakout moves being able to hold on any given day. So we've got a little inflection point in the near term. We are expecting a little bit more US dollar buying in the near term, but we really do fully understand the fact that we need to be in, out, and away because these are moves against the main trends.